All right, we're going to delve into one of the most pertinent issues that will impact our society and our economy, which is the taxation policy as outlined in Belanjawan 2025 last Friday. And taxation is more than just a fiscal tool. It reflects the government's priorities in shaping a sustainable and inclusive economic future. And as we explore the policies announced, we'll also examine how it will affect the businesses, household, and the broader socio-economic landscape in our industry. And for that, I welcome our guest. Already on the side is Thenesh Kannaa, the Executive Director, TraTax. I want to say thank you very much, Thenesh, for joining me. We can see last week is a very busy week for everyone, every sector, every individuals. And maybe you can share with us which one of the 5 key budget measures do you believe that will have the most significant and long-term impact, and why?
Okay, if we look at the budget as a whole, of course, there are quite a few measures, subsidy and KWSP and minimum wage, but I think I'll focus only on the tax measures, which is my forte. So if I look at the top 5 talked about, most concerning people, the discussions over the weekend and all that, I think first is dividend tax, 2% tax on dividends. Second would be the SST, where it has been expanded that the sales tax, service tax would be expanded. Of course, there were examples quoted like imported premium goods, but if you look at the announcement carefully, it's not limited to just imported premium good. It also can apply to potentially domestic goods and services, because SST we're expecting a 10.8 billion ringgit increase. About 5.8 billion from new measures, another 5 billion from the existing scope. Third is new incentive framework to be tabled in Q3 2025, and incidental to that, we have new initiative on supply chain resilience, which is timely given the quote-unquote trade war that's happening. Incentives for IC design, which is very well calculated to take advantage of our existing strong semiconductor and E&E sector. We also have incentives announced on new programs for semiconductor, AI and related industries, which aims to address the talent shortage that these industries have at the moment. Because if you get investors, it must benefit Malaysians. For that, the talent development must be there, right? So it goes to the talent issue. That's number 3, incentive framework. Of course, 1 billion is allocated for the general fund, 100 million only for supply chain resilience on the equity crowdfunding matching program. Number 4, I would say on individual side, personal tax. Of course, there's a lot of personal relief and all that. But what really caught attention is stamp duty, I won't say exemption, but significant reduction in stamp duty for insurance policies that is assigned to trustees and love and affection, which is very good for legacy planning. For an insurance policy of 1 million ringgit, we're talking about reduction from 40,000 ringgit of tax to 1,000 ringgit of tax, which benefits legacy planning at all levels. The other thing at the individual level that caught attention is the personal income tax exemption for foreign source income remitted into Malaysia until by another 10 years, until 2030 something. So that gives certainty there. And the 5th is carbon tax and sugar tax. Carbon tax is to go live in 2026 for iron and steel, which is very sensible, because if we don't do that, EU is implementing CBAM. The taxes would be paid in EU, so might as well we capture the revenue here and claim a credit in EU. But it also remains to be seen how it will affect the exports to non-EU countries and domestic use. And particularly a big question mark is whether carbon tax would also apply to energy sector or not. There are some differences in certain documents published by MOF on this, so that remains to be seen. The other thing is, of course, sugar sweetened beverage increased from 50 cents to 90 cents. So these are the 5 key areas that we see most talked about from tax point of view.
There's a lot, the list of taxation we can see within the outline in Belanjawan 2025. Maybe you can say one of the taxes is also to address talent shortage. Maybe can share with us how is this measures addresses income inequality or even benefit the lower income groups in Malaysia?
So if you are below 3,500 ringgit, give or take, actually there's no income tax deduction from salary. That feature is maintained. There is no change to the tax rate table per se, so that's maintained. But what has happened is, of course, we've included dividend tax of 2%. So if you have individuals who relied only on dividend income as a source of income, they may not have been a taxpayer in the past, but they would be included in scope to broaden the tax base.
Okay. And then you want to dive deep into the dividend tax, maybe explanation, expectation. Maybe you can share with us detail how the dividend tax works and what specific probably exemptions apply under the new tax framework.
So until 2008, Malaysia, in 2008, not 18, so it's quite a while already, we had the imputation system. That means all the shareholders, we will tax them and give them a credit. That revert to a single tier system. That means we tax dividends only at the company level since 2008. So that broad feature is maintained. That broad feature is maintained because what's announced in the dividend tax is from 2025, January 2025, we will tax only individual shareholders on dividend income. So if a company is receiving dividend from another company, there is no tax. This dividend tax doesn't apply. It only applies to individual shareholder, that means the final level. And the tax rate is 2%, applies if the dividend income is in excess of 100,000 ringgit per year. And there are exemptions for foreign source dividend from Labuan entities. There are also exemptions for dividends from tax-exempt companies and so on, and closed-end funds. And there are also exclusion from distributions from KWSP, LTAT, and any unit trust. So we call it exemption and exclusion because exclusion is for distribution. Maksudnya is dua-dua pun tak ada cukai lah. Both are not taxable, but it's just a slightly different technicality.
And are there any plans in the future to reintroduce or introduce new exemptions for certain groups or even industries?
I don't know at this juncture, but I think this is quite a calculated move. I think there are 3 groups of stakeholders, if I may say, is affected by this tax system. Maybe the first is the owner-managed SMEs. So in an owner-managed SME situation, a common accusation we hear is that it's an amount of double taxation because you tax them at the corporate side and then you tax them again at the shareholder side. I would say it's partially true, not fully true, because there is no double taxation is twice, right?
Yes,
That's
correct.
the meaning of double, dua kali.
Yes.
This is actually, double is 200%, right?
Correct.
That means corporate, if you have corporate 24%, for individual another 24%, that is double.
Yes.
This is not double. This is taxed twice, but it's not double taxation.
Okay.
Because you have 24% at the company level, and then you have a further 2% at the individual level. Add up is still 26% maximum.
Okay.
And for individual tax, like say a wage earner, salary or rental income, the tax can go all the way up to 30%. So this one, even though you say it's taxed twice, I won't say double, but twice, 26 plus 2 is still 26. Sorry, 24 plus 2 is still 26.
Correct.
And remember, some SMEs, the tax rate is as low as 15% or 17% for part of the income. So it is taxed twice, but it is not double taxation per se for the SME group. That's one. The other group we always say is the ultra high net worth individual. Ultra high net worth individual, there's a definition above 30 million net wealth.
Oh.
Okay, 30 million, that's the definition. But usually when we talk about ultra high net worth individual, we're talking about the billionaire group, put it this way. And yeah, they imagine somebody who has founded a company, listed on the Malaysian Stock Exchange, and maybe now have 30% shares in that company. It's not controlling interest, but it's still very substantial. So for this group, of course, there is no issue of capital flight or whatnot because your business is tied in here. And to be honest, this group also, their priority includes succession planning, asset protection, so they would have done legacy planning, and that's why it remains to be seen whether this 2% dividend tax would also apply to dividends paid to unit trust body instead of individual. That remains to be seen. The third group is passive investors, so like maybe you and me, we have some extra money, we invest in stock market. There is also question, will this lead to a capital flight, invest overseas rather than invest Malaysia? Theoretically possible, but if you look at it realistically, right, if it's a dividend yield of 5%, we are talking about investment about 2 million ringgit to hit the 100,000 threshold to be in the tax net. So 2 million ringgit, usually you will diversify your investment anyway, and part of it goes to unit trust. Unit trust distributions are not taxed. Dividends to unit trust locally are not taxed as well. So the impact may be minimal, I would say. So it's it seems to be a very calculated move. There is additional tax, but whether there is disproportionate disequity, I doubt it. In fact, OECD says when you impose taxation, it's not only for revenue, you must also look at certain principle. One of it is horizontal equity. Horizontal equity means if you and me earn the same amount of income, you earn from salary, I earn from dividend, our total tax should be the same. And this is a move to reinforce horizontal equity in my point of view.
And definitely it's quite a complex, we can see from the allegations of dividend tax. Dividend tax is constitute the double tax, but as your explanation, it's very important for the governments to address public's concern. Maybe you can share some examples.
I just want to say it's taxed twice, but not double.
Tax-wise, not double. That's the correct one, how we should view the dividend tax. Maybe you can share some of the examples from neighboring countries who implemented the double tax, and do they face similar criticism, and how do they address this concern?
The taxation of dividend is philosophical. It's very philosophical at different countries. Some says that we will tax you twice without credit because it's two income. Some says no, a company can never consume, so we'll tax you at the personal level and give you an imputation credit. And some goes on a single tier tax. And Malaysia has taken a kind of a blend to arbitrage the between the personal income tax rate and the lower corporate income tax rates.
And how does the budget address personal relief for the first-time home buyers?
It provides a relief of 5,000 to 7,000 plus based on the price of the property. This is a reintroduction of a relief which was there until 2010. It may reduce the tax burden of first-time home buyers to a certain extent.
And probably my last question, Thenesh can share with us, with the biggest increase in tax revenue coming from SST, what are the specific behind this change?
Okay, so I saw a lot of news going around about avocado and salmon.
Salmon, correct.
But if you look at it, the additional sales tax revenue from imported goods alone is over 1 billion.
Okay.
From sales tax from imported good alone, from this new measure, not talking about the general increase.
Okay.
From this new measure, 1 billion, over 1 billion. So it cannot be just avocado and salmon.
Salmon, correct.
It is not the value, we're talking about the tax value at whatever percentage it is.
Okay.
So it has to be definitely a longer list there, and that has to be monitored, number one. Number two, there's also about 0.9 billion estimated from domestic sales tax, domestically made goods. So it's not necessarily it's not just limited to imported premium goods. There's probably a wider circle there. Service tax, highest, over 2 billion ringgit additional revenue expected. The thing with service tax is, if you talk about double tax and all that, actually your should be more worried about service tax than dividend tax. Because service tax, unlike, we don't have an input tax credit mechanism. So when you include more sectors in it, we need to really carefully design the exemption mechanism so that there is no double taxation or cascading effect or compounding effect. Because people say, but Thenesh, this is indirect tax. So of course, the PM made it very clear. He's not going to look, the budget announcement makes it very clear. It's not going to be on the consumer facing. It's going to be on the commercial transaction. But commercial transaction will ultimately come to the consumer pricing one way or another as well. If we look at it, the name also is indirect tax, which means indirectly you will be taxed, even though there is no direct tax at the consumer level. And that effect has to be studied to make sure there is not too much of a compounding effect.
Okay.
And the other thing is also the tax rate. I forgot to mention, when you talk about imported goods and all that, the tax rate has not been fixed. The budget announcement says that will be studied. Hopefully, that kind of offsets some of the forex benefits that we have and doesn't lead to an increase in the consumer prices. Hopefully, that's calculated in such a way.
Definitely, again, I want to say thank you very much to Thenesh Kannaa, the Executive Director TraTax, for helping us understand the policies that will equip us to better navigate the challenges and opportunities ahead, especially in the tax context. Again, I want to say thank you very much. And definitely, all of our discussion here will be featured in astroawani.com and across all social media platforms.